All right, what's going on, guys? Just gonna go over oil real quick. Just gonna go through gold, silver, overall market. I have some plays set up to play the news of whatever happens this week. But you can see oil is getting up pretty quick to that 120 mark today. So, we usually get these indecision candles, as you can see right here. But now we're approaching this resistance that we hit back in March, about March 26th. So the highest we've gone in oil recently is 130, which is up here, and that was the Russian-Ukraine conflict. So that by far is the highest that I think it can possibly go. And at that point, I'll just play oil back down. That'll be one of the easiest plays of the year. Just give myself plenty of time for that to happen. Because in history, whenever oil has spiked, it'll always go back down. Okay. The other thing I wanted to go over real quick was the overall market. So today we are still having trouble getting around these moving averages on the daily time frame for the S&P 500. Yesterday I was going over option plays, option straddles, which is buying a call and a put at the same time. But I'm not going to go too deep into that right now. But all of these little lines that you see here, these are all the opening ranges of everything. So again, the thing to notice here is that we are having a very difficult time getting above these moving averages. You could see 1, 2, 3, 4 times we cannot get above these daily moving averages on the S&P 500, right? So this is where we are. So either one of two things is going to happen. We're either going to come down like this, okay? We're going to have a clean bounce back up, or we're going to stop here and then go much lower, okay? So bounce back up, bounce back down, right? And so wouldn't it be cool if you could make money, regardless of, what direction it goes? What if there was a way where if the market jumps up or the market goes down, we win either way? Well, there is a way that we could win either way. You could buy an option call and an option put on both sides. So, for example, I could build that out just to show you how much money you could make for how much money you could put down. It's actually pretty simple. Um, let's go to SPY and let's give ourselves all the way till Friday. So we have 3 days of expiration. Okay. Let's give ourselves till Thursday. There'll probably be a pop tomorrow or the next day at the very least. So let's say we do a 670 call and a 630 put with 2 days of expiration. Okay. If the S&P 500 goes up 2%, okay, we will make $334 in pure profit. If the market goes down 2%, we'll make $121 of pure profit. So as long as you believe that the S&P 500 in the next 2 days are going to go 2% in either direction, you'll profit over $120. Okay? So it doesn't matter if it goes up 2% or the S&P 500 goes down 2%, we'll win either way. So that's what I was going over with my group last night, how to set this up. It's really simple. I would say it's just as simple as buying shares. You know, it's just again, it comes down to clicking a button. But just setting it up, this only costs $173 in total for this play. So again, if we go up 2%, if we gap up 2% tomorrow, we'll make $313 in profit. And if we drop down 2% tomorrow, which, if we start attacking Iran, it'll probably be like 3%. Um, that would be $283 worth of profit. So it doesn't matter. Even if the market is unchanged tomorrow, let's say we go down, 0.4%, you'll only lose $10 of your 173. So either way, in a news event, it's pretty straightforward to win here. Okay. There's not a whole lot of and look, let's say I do absolutely nothing for a whole day and I wait a whole day. That is when, we start to lose. So obviously, is there a downside? Yes, there's a downside if you do nothing. You buy this and then you forget about it. Then you can see that your negative part starts to get a lot bigger. So the idea here is that you're playing this for a pop in either direction. Either we go up 2% and you sell the entire thing, the call and the put at the same time, or we go down and we sell the call and the put together. So regardless, you'll make $100 in profit, um, either or. And the percentages are also pretty good. If we go up 2%, you'll make to the upside, you'll make 185%. And if we go 2% to the downside, you'll make about 68% profit. So overall, it's not bad. I mean, considering that I think we can all agree that we're going to pop in some direction because of the news. It is going to move, in some direction. So, that's what I was going over with my group last night. But again, my group is mostly beginners. So, a lot of it is, pretty slow and methodical. I try to talk with them, not at them. Because I always hated on Zooms when people would just talk at me. So I tried to include them, in the conversation. So that's how you win on either side. So it doesn't matter if the market goes up here or it goes down here. It doesn't matter. You'll win both ways with $173. So not bad, you know, not bad at all. That's exactly how you could win both sides. Now, moving forward, let's see. Today is pretty much going to be another sideways day, right? This is going to be, this is yesterday, so I'm going to erase these lines. And let me erase this blue line. Okay, this is today. This is the opening range of today. We have here, first two 15-minute candles, and down here. Okay, so we tried to break down lower. We got down to this buy order support level, and then we came back up. Again, it wasn't that surprising to me that we're going sideways again because again, we're priced in for tomorrow to be the bigger move. Or maybe it'll be sometime this week. It doesn't really matter. But we're going to go sideways, as you can see, be going sideways, all week or the last 5 trading days until we get either a long ceasefire or we start bombing Iran's infrastructure. One of the others is going to happen. Let's take a look at gold. So, and if you guys want me to go over the how to make money on either side again, I can do that for you. So it doesn't matter again if the market goes up or if the market goes down, you'll win either way. So that's just called a straddle in options. But anyways, I'll get back to that if you guys want to see that again, or if you want me to go over that again. I'm gonna go over that with my group around 1 o'clock. So I have about 20 more minutes for this live. Okay. Gold, again, I would love to see gold come back down to this level right here, from here down to here, okay? And then around here, we build support, and then we can play it back up to this level around here. So that is the current way I'm looking at gold. I don't force trades unless all of the stars align. You know what I mean? And so to give you an example, right? The same thing is going to happen with silver, but I'll give you a quick example with another stock where all the stars will, align. So I have one more stock that I want to show you after silver. But again, silver, same situation. We can have price right now come back down to this level, and then I would be interested in buying it. I don't buy things in the middle for no reason, right? That's just risky. And I know people need their trading dopamine hits, sometimes on a daily basis. That's fine if you want to do that. But for me, I would rather just wait until something where all of the stars aligned, and it's really just like a no-brainer type of play where I could put bigger money in. But I get it, people need their dopamine hits in trading every day. So if you need that, then just go with a lower size. But I would rather wait until it gets to, a pretty strong level before I would play something back up like silver. Okay. Now, let's go over Netflix because that's going to be one of my top stocks right now. Okay. So, this is pretty straightforward. Now, in a normal market, right, a normal market where we're not in an oil crisis, I would love to play Netflix as a swing back up. So as soon as this broke right here, this moving average, the 20, in this triangle structure, I'd play it straight up to the 200 moving average. So that would be pretty simple, right? That's what we did literally from last April to last November. It was like, I don't know, hundreds of these types of swing plays. It was super easy because the market was going up. So every break just ran up to the next level. There was a point in time where anytime Nvidia went down for 3 days straight, we were just buying calls on them, for it to go higher. So or double leveraged Nvidia ETF. But anyways, Netflix, right? Number one, is there a breakout? Yes, right here we could see it. Okay, here's your breakout. Number two, is or are there past buying pressure areas on the chart? Yes, we have big buying pressure down here, and we have recent buying pressure right here. Number three, momentum heading up. Do we have momentum that's heading up? Yes, we have momentum that's heading up. You can see it right here. This is a Trader Daddy indicator where we took the top 10 momentum oscillators and we coded it into one. So we found this to be the most accurate out of all of the momentum indicators that are available. Now, number four, volume is going up. Well, let's check. More so, is it green? Is volume green? Yes, volume is green recently. Cool. So we have the top four. Is there a breakout? Yes. Is or are there buying pressure areas on the chart, these green rectangles? Yes. Momentum is heading up? Yes. Volume is going up green? Yes. Now, for Netflix, is the stock at a discount? Yes. We are down 25 or 26% from the high. So we are at a discount. And then number six, what makes it special? What external things would make this special? Where number one, it's the first recession-proof digital service. Okay? For the average consumer. People will come back to Netflix even if they cancel it. And, that's been shown throughout the last 5 years. So even if people cancel it for a couple months, a lot of times within 6 months they do come back. Um, or their family plan just gets bigger and they get incorporated into it. Either or, it's one of the, recession-proof digital services, and now, they're going more international with more international films and TV shows. So again, with the stock being down 25% from recent highs, I think it's one of the pretty good stocks overall. And so people always want to know, if we're buying a stock, how do we know that it's a good time or a good entry? Well, here's a nice little list for you, 1 through 6. I have a lot of these lists. I have dozens of these lists of, when, what to look for before buying, what considers a breakout, So, having all 6 of these checked off is a really good start. I could, name a whole nother 6 things, but, I don't have that much time today. But again, the only negative that we have right now is general uncertainty. So I can't play this as a swing play back up, because why? Because there's general uncertainty right now, right? So the only way that I've played it right now is that I've only played Netflix as a longer term play. Because if you zoom out, you will see for yourself that we still have a lot of room to go back up here, 25% to the downside, right? We still have a lot of room, but this is a great breakout. But I wish I could find these breakouts easier instead of having to look at every single chart. You know what I mean? I wish that there was a website that there was already like code in it that told me when these things were happening. You know what I mean? And I guess I'm pretty lucky because there is something that exists. Uh-oh. Well, it did exist. Hold on a second. That was a bad setup there. There it is. Trader Daddy Pro tells me the top plays. These are all of the stocks that are breaking out with the current parameters that I've set, that I just went over with you, right? All of those indicators are all breaking out at the right moment. You are going to see right here. So instead of having to go you know, from chart to chart to chart, having to go through this entire list all the time, it's all going to be right here. Okay. So all of these have broken out with similar indicators, not just up, but ones that have also broken down to the downside. So, you know, it's just, nice to have them all in one area. Okay. I think one thing that was extremely interesting was also Apple. Okay. And this actually looks really good. We've been doing this play over and over and over again, and I've been showing you this every day in these lives, that this is a really strong support for Apple. So, I could see possibly swing trading this back up to this 50 moving average. So 10 points for Apple to go back up to this level here. So right around here. Okay. From here to here. How much money could we make playing that? Well, we could just go over here and we could do a May 15th call. And then we could do a $300, let's do a 290 call. That's $58, okay? $58. That's how much it costs for one contract. Now, if we go back up to, we said to 260, that would be 160% pure profit. So that's not a bad play. 160% is not that bad. Let's see. Sorry, 260 is right here. So that would be $92 of pure profit. And you're only putting down $58 for Apple to swing back up, and you have until May. So, and you can take that out and profit whenever you want. So that's not that bad. You know what I mean? It's really not a bad it's not a bad play at all. Because even if it goes lower, you could buy another one, cost average down, and eventually this will probably pop back up. Apple's been the only stock that hasn't really been affected by anything worldwide. The only reason it went down today is because their flip phones have been delayed or whatever. And I don't think anybody really cares about the Apple flip phones. But the one thing that I want you to notice here with Apple more than anything, this yellow line, see the yellow line? This 200 moving average is being a great level of support for it. And this green um, buying buying pressure block, we have not been able to get below it 1, 2, 3 times. Okay, we haven't even gone below 243 since September of last year. So, you know, right now, I would think Netflix and Apple are the two stronger ones because Meta, you know, you could say Meta and Microsoft too, but they still have room to go down. So for example, and you guys can give me any other stocks that you want to look at. I mean, this is your time to give me stocks that you want to look at. You don't have to, you know, anything that you want me to look at, I'll definitely look for you. But you can see that Microsoft is now looping back down again. So that's why I'm not rushing to get into Microsoft again. You know, I'm going to wait for this to come back down to 350 before I add any more shares. You know, I think that's valid. I don't see why I have to, you know, look, these are all loops. Loop down, loop down. This is going to loop down again, and then I'll play it back up. So, and the same thing I think with Meta. So right now, Apple and Netflix are the ones that are, you know, the real ones to take a look at. Halliburton. Yeah, I could take a look at Halliburton. You can see Meta's looks exactly the same. Has more buying pressure. That's good, but still. HAL. Yeah, I still like the setup on Halliburton. You know, Halliburton is going to be rebuilding any of the oil infrastructure and economy. So, you know, if you look at XLE, this was a play that I did with the group last week off this 20 moving average. This is a simple one because if you could just look for yourselves, right? Look, every time it gets to this 20 moving average, it pops up. This is the ETF with all of the oil companies. So, you know, it's if you want to get back into the oil companies, I still think they're at a really good level. Just something to think about also is the industry that does the best in January and February, like oil, usually on a given year is the top performing industry for the entire year. So it wouldn't surprise me that oil will be the top performing sector for the entire year because, you know, obviously, you know, that's just from all the geopolitical events that have happened. But also, you can buy things at the bottom right now. Like if you look at the software sector, take a look at this. This is the software ETF. And what do you notice when you look at this software ETF? Okay. What do you notice? Every time we get down to this level, we always go back up for the last 2 years. Okay. We are extremely undervalued with software. So, and we have all these levels of buying support under it. So I don't see it just crashing through all of these levels. So, you know, you could ask, well, what's in IGV? IGV is Microsoft, Oracle, Palantir, Salesforce, I think CrowdStrike, so software, will come back. Any other stocks before I go? Let me check on YouTube real quick. No? All right. Any other things before any other ones that you guys want me to you guys can also message me directly and I'll get back to any of your questions. Anything that you want my opinion about, I get back to people, almost very, 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 very quickly. So you can always reach out to me for anything that you want to look at. Wells Fargo is looking better too. I was taking a look at this. The banking sector is doing a little bit better, but private credit is not doing so well. Um, it's a nice support right here. Anyways, all right, guys, I have to run and I have to do my group. I have office hours now. It's basically just a time, just people can pop in and any help that they need. So I always have, hours available during the week where people can just pop in and, anything they need help with, I'll help them with. I also have beginner groups. I have um, morning trading groups that I do with them. I always have one at night, regardless, for more of like a teaching strategy session for the next day of what to look at and what to find and everything. So, um, it's I built it for busy people, um, you who can just choose the times that they, want to come into one of the groups during the day and see what we're doing. So the repetition of me doing the same things over and over and over again, I think helps a lot. Because the people who are like, oh, and people who ask me, like, oh, what book can I read? And to be honest, it's such a bullshit question because number one, you're not going to look at the book. It's a cope answer. It's a really cope question. Number two is I would answer it like this. You're looking for a book on trading. It's kind of like saying you're looking for a book on how to swim. You know what I mean? It's one of those trial and error type of things you have to actually do yourself. It's not like algebra. It is not like learning a school subject. This is a soft science. It's not a hard science. There is no one strategy that just works all the time. There's different nuances that come in every single week, every single day, and evidence builds confidence. So the more evidence that you see of something working, the more confident you are to put bigger money on the next play, the more confident you're going to be because you've seen more evidence that it is working for you, right? So nobody can tell you, you know, to do this or do that or anything. It really comes from you just actually trying it through trial and error. Um, and seeing the same cycles, seeing the same things until it becomes kind of boring. And that is when you know you're getting to an advanced level when it kind of gets a little boring. The part where people mess up is where they start to get so bored with trading that they need those quick dopamine hits. So they'll start to try to get these quick little trades, these quick little scalps, you know, and the chances of you winning on those is quite small, And I'm not look, anybody can win on those for a week, a month, 2 months, 6 months. I'm talking like 3 years straight. The amount of people that I've met that can do short-term scalping trading every day for 3 years straight. I've out of like I don't know 4,000 traders I've probably met in my career, um, of being a financial advisor since 2012. I would say I've only met 3 or 4 people in my life that have ever done it. So and I get it, right? The marketing out there is extremely compelling, but they're content creators. That's the first thing, you know. It's a funnel, of getting people to showing people, look, this is if you do this every day, you'll make this much, and it never works that way. It never does. What about Lind? I don't know what that is. What is that? I'm not sure what that is. Is that a stock? I don't know what that is. Um, but yeah, if you guys don't have any other questions or anything else that you want me to go, look at, or anything else that you want to talk about, then I'm going to get going soon. But before I go, I just want to take another quick look at crude oil. And just to show you the difference, right? Here's crude oil right now. Okay. These white candles means it's way overbought. Yeah, I don't know what Lind is. I don't know what that is. You have to explain it to me. I don't I don't know what that means at all. Here's the Russia Ukraine. So we got up to 130 at one point in 2022. So we are very close to getting there one more time, and then I play it down. Um, LIN. Okay. Well, now that you gave me, oh, okay. I've never seen this before. Oh, but you know what? I think I did this with you last week, right? Because I have this drawn. So if price, I like when this is not bad. This is a triangle break, a retest of the 20 moving average. If we get a strong, if we come back to this area right here and we get a strong break, and then you can try to push up from here, that would be what you're going to look for. If we go below this 50 moving average or below 480 on this stock, then you're going to be in trouble. So you're going to try to look for a strong, momentous push back up from this area right here. Gold. It's always when I'm trying to get off of the lives like 30 or 40 minutes later that people start requesting things. Um, Again, I'm just waiting for gold to get down to this area before playing it back up. Like I said, I want to only play things that um uh, do plays that are at certain areas. I will patiently wait until it gets there. So but in any case, guys, I do have to run. I have I have my office hours with my group now, so I have to help them. It's a beginners group slash office hours, so I make myself available certain times of the week to help them with whatever they need. Um, Most of my group are start out as beginners, but I would say, 4 to 6 weeks later, they're definitely, intermediate, and then they're pretty much advanced after 3 or 4 months. So it's a pretty quick transition. There's a lot of hand holding. There's one-on-ones. I try my best to have a personal relationship with all of them. Because I get competitive with myself. I want them to do well, even over my own trading. Like when I win a trade or lose a trade, it's whatever at this point. But if I see someone that's a beginner and then they start to like have an unbelievable month, like 3 or 4 weeks after starting, that is more interesting to me. So, in any case, um, it's only $80 to join my group for an entire month. So, uh, but don't go to my website uh, to buy it. Just message me and I'll send you the $80 one. Because if you go to my website, it's going to be the $99 link. So the people who actually show up to my lives, I always like to give them a discounted price. Um, or the people who show up to my in-person meetups. I also have free in-person groups in New York and Miami every month that are completely free. So I've been doing that for the last 12 years now. Um, all right. So if there's no other questions or anything else, I'm going to go. You guys can message me. You know, I get back to you guys regardless of whatever you want, but whatever questions you have, I make myself available all day just to help all of you. So have a great rest of your day, and I will see you guys here tomorrow, somewhere between 12 and 1 o'clock. All right. I got to get back to my group. Have a great rest of your day, and I will see you tomorrow. Bye bye. Take care.